So, Karoly, how did you find out about this opportunity in the university venture capital world, basically?
Through my work, I started to build up the first university venture capital fund in Hungary and in the region, together with OUVC at the University of Óbuda. Naturally, I was curious about the sector, so I thought I want to learn best practices, I want to learn research, statistics, templates, playbooks. So I was doing my research and reached out to many universities, and to my surprise, I found no formal community or data exchange platform within the university venture capital segment. This is how it started.
To which universities did you reach out to?
First, I reached out to, I think it was Oxford, but then to many of the UK universities, and then later to US universities. And what I have found is that some of them have strong partnerships with each other, maybe 2 or 5 of them, but they are like a little bit isolated from the rest of the community, the rest of the players. And then I discovered that there are so many universities that already have a tech transfer office, but they do not yet have a venture capital firm. However, they are aiming into that direction. They're seriously considering launching their own VC firm. And that's like in the thousands, so many universities are like that. And they also lack best practices. So they are also naturally turning towards the successful players to learn.
And what would you say is the difference between a tech transfer office, like a TTO, and a university VC?
So from where I see it, a tech transfer office enables a university research and the researcher team to commercialize their research in the very early stages. Most of these tech transfer offices, they have some budget to support, to invest, very small ticket sizes, just to create the basic structure and also take care of the IP transaction, which is always a pain point, so that the IP from the university somehow becomes the IP of the startup, the spin-off.
Yeah. And how, because we found out that there's about 1,200 TTOs in Europe and about 100 plus, 120 European university venture capital firms. And we found out basically that there's no structured organization or structured data platform on the market that basically unites these university venture capital firms. Do you see that as an opportunity?
So there are communities around the tech transfer offices. Like we mentioned earlier, there are some micro communities, fragmented communities in the university venture capital, where there is no united platform. So community is one thing, which is, I think, the heart and soul of anything. But then data exchange should be structured through process, and there is no such thing. By data exchange, we mean structured and relevant data to be shared and then to have access to by the members of this community. And as an example, the best way maybe to explain it, that in the last 2 or 3 years, the venture studio segment experienced a boom, a revolution in that sense, mainly thanks to Max Pog and his team and his initiative. And what he did is basically he did an outreach, a research, gathering data from all the venture studios he could find globally, structured the data, published the data, formed the community, and created a platform for further learnings and data exchange and facilitating connections. I think that's good direction. I'm not saying it's 100% applicable, but we can learn from that initiative. As opposed to the venture studio community, there is no such or similar tool, community, solution in the university venture capital segment. And second part of your question was about the opportunity. So now we can dig a little bit more into the statistics. What everybody knows, even without data, is that there are some very successful universities, successful in terms of number and quality of spin-offs, the amount and number of venture capital attracted as investment into their spin-offs, and number of exits and so on. There are really successful ones. Oxford is one example, Cambridge another one, MIT, Stanford in the US, and so on. So what if the whole European or global university venture capital segment could step up one or two levels, learn from the good ones? That would make a huge impact on the European economy as well as investments. So there is a huge opportunity that the whole ecosystem is missing out on.
Yeah, and especially in Europe, we have a lot of deep tech innovations and researches, which is perfectly aligned basically with what we are aiming for. And you said about the universities that are top performers basically, like Oxford, also in Switzerland, there's one in Germany. Did you know that actually in Europe there's only 4 university spin-offs that are unicorns in comparison with the 160 already existing? So there's only 4 companies.
That's the missed opportunity.
Yeah.
Yes. And another eye-opening statistic is 78% of the European university spin-offs never receive investment from a market venture capital. So not from university, but from the market. That's a missed opportunity for the venture capital players. It's not that they don't want to invest, but there is a bottleneck in the system why they cannot invest. And we can talk about that later. Another data point on the size of the missed opportunity is the finding about top 10 European university producing 33% of the spin-offs. Is that right? And the median university produces 0.08%.
Indeed, that's a gap of 400 times.
Yeah, that's a huge missed opportunity. And I mean, if you look at it from a macro perspective, it's not only about venture capital, it's the whole economy. It's creating jobs, innovating, putting actually Europe in a better position globally. Strictly speaking, from a university perspective and from a venture capital, it's just almost unimaginable huge gap. The point is that it's possible to bridge this gap because some universities are doing a great job.
Yeah, and for us, it's the job to put the best practice in also for universities that don't have a venture capital firm at the moment.
Exactly.
How do you see a lot of opportunity here for universities that do not have a venture capital firm but would like to open one?
Yes, I mean, I think let's take one step back and just look at these two very different words, how they clash and meet. It's a clash of cultures as well. Venture capital and the academia. So universities have basically 2 activities or 2 missions. One is education, the other is research. And venture capital is all about making returns on investments and growth for their LPs. So very different KPIs, very different culture and approach. And oftentimes, when a university is about to launch venture capital fund or even a tech transfer office, the bottleneck is the culture. And then it's a systematic error at the end because academic people usually, and I know it's bad to generalize, but that's what we see, that it's a different profession to build up a venture capital firm than to be a good researchers. However, there are many great examples which are exceptions. There are good researchers who have done outstanding businesses and investments and so on, and attracted lots of venture capital. So it's also possible, but it's not your average spin-off. So on the other hand, venture capital knows almost nothing about how academia works. I mean, do they need to know? But there is certainly a gap between the two worlds. So it's one thing to set up a venture capital firm, but it's another thing to attract the right talent to run that firm. And those people, most of those people shouldn't come from academia. They should come from venture capital or entrepreneurship, that kind of a background.
You were mentioning that there is a gap between the academics and also the VC funds. We have seen quite a lot already on the market, right? How it should not be working. Things like 30% equity share for the universities, but also in royalties as well. So 30% of the revenue in royalties. As you are coming from a venture capital world, how do you look at this from your professional point of view? Would you invest in a company that is partially owned by a university and also is contractually obliged to pay royalties, 30% of its revenue in perpetuity?
Yeah, it's a great question, and it goes right into the heart of the problem, which is, I think, that some universities, end up acting as investors. And when you act as investor or owner, then naturally you are looking for some ownership in the spin-off, and because of your contribution. But that's really not compliant with the market. So most of the venture capital firms, when they look at a university spin-off and their cap table, their equity shares structure, and they see that university holds 10, 20, 30% ownership, they don't even touch that opportunity. It's not even a due diligence, nothing. Why? Because now, as a VC, now I have a founder or a co-owner in the company who works in a very, very different way. And what way? Bureaucratic, slow, and has absolutely different incentives. So building a successful startup is very, very difficult no matter what. Why make it more difficult? So venture capital is all about assessing and mitigating risk. And that ownership structure is like the biggest red flag, is like, it's a no-go. So first off, and it also goes hand in hand with the IP strategy of the university. So that's why if and when universities are brave enough to launch their own venture capital fund, that is already a very good direction, because that arm of the university is a structured way to actually invest in spin-offs. Yes, a university venture capital can and should hold ownership in a spin-off, but not the university. And how to handle this situation before a university has its own venture capital fund? And I think the best way, and we just seen it recently in Hungary in a university, that the university was, I think, smart enough to say, I don't want to hold any ownership in the spin-off. I only ask for a royalty fee of, I think it was only 3%. And that is only when the startup is making revenue or profit, which means is a shared risk. And that's the way it should be. It's a shared risk. So we are all pushing that one spin-off to make it successful, because when that happens, then we can all go and harvest. That's the only way, and that's the only compliant way probably with venture capital as well.
Yeah, and that's probably also the reason why only 78% of the university spin-offs get funding from a professional VC afterwards. So there's just a huge gap there.